Hey traders, Jason here from Levitt Brothers. So in this video, I'm going to talk about whether the mega cap tech stocks are in the process of bringing the market down. The mega caps are Google, Amazon, Microsoft, Facebook, Apple, Nvidia, and Tesla. They have an outsized influence. There's two different things here. Number one is that they have most of the gains this year have been contributed to these 7 stocks, which I'm going to show in a minute. Okay, so the math involved in the market would tell us that it would be impossible for the market to move up unless these 7 stocks are also moving up. They just have too much influence. If Apple's going to go down, then there needs to be a couple hundred stocks that go up just to counter it because Apple is so big and has such great influence. Okay, so it's the math behind it is really hard. And then the second thing is just the implications. If these stocks are weak, then what does that imply about the market, about the economy? If Apple's weak, does that suggest that consumers are softening? If same thing with Tesla. If Amazon is weak, same thing. Does that imply something about consumers? If Facebook and Google are weak, does that imply that companies are not willing to spend as much on advertising? Okay, so there's 2 parts here. One is that if these 7 stocks are weak, then that implies something about the market, something about the economy. And then 2 is like mathematically, it's just not possible for the market to move up unless most of these 7 stocks are doing fairly well, just because they have such an outsized influence. All right, so let's go through. I'm going to show a couple charts with the Russell 3000 and S&P 500, which talk about the influence that these have, and then we'll go through the 7 different charts. All right, so here is 2 different lines here. One is this kind of pinkish orangish line, and one is this gray one. So the pinkish orangish one here is the contribution to the Russell 3000 of those 7 stocks as of a couple days ago on October 25th. The contribution was 8.06%. The contribution, and this is the Russell 3000, so the contribution of the other 2,993 stocks. It's actually not 2,993 because the Russell 3000 doesn't have 3,000 stocks, but it's close enough. Anyways, the other close to 3,000 stocks are net down 0.2% this year. Okay, so if you take away these top 7 stocks, the market's actually flat. So there's a lot of people who say the market, 2022 was a bad year, is a bear market. Then the market has rallied in 2023. So 2022 is nothing more than just like a bear market within a bigger bull market. But actually, there isn't a bull market this year. Like, other than these 7 stocks, the market actually is flat this year. Okay, so what happens if these 7 stocks over here start falling? Then what happens? So let's look at the next chart here. Okay, this one, similar idea. You have this top line here, which is those 7 stocks, which have averaged a better than 50% gain. This is for the S&P 500. So we got the top 7 stocks here, and then we got the other 493 stocks. Okay, so the top 7 stocks, this is not their contribution to the index. This is just what those 7 stocks have done. These 7 stocks have gone up, better than 50%. And the rest of the S&P 500 is about, I'm just eyeballing this, about 5%. So again, what happens if these 7 stocks weren't doing that? What happens if those 7 stocks, start to fall? This number would go down, then the net of this would end up going down quite a bit. So a lot of talk about how the market is top heavy and such. This is kind of proof. Most of the gains are concentrated in these 7 big stocks. And the question, is that healthy? I mean, these 7 stocks are very diversified. They have a lot of different product lines, so you can consider them to be many different companies. So maybe it's not 7, maybe it's like 20 or 30 companies when you actually break out their big different divisions. I mean, Microsoft has like 10 different billion-dollar divisions by itself. I think more than that. So, but it goes without saying, like, what if these 7 stocks start to falter? What happens next? So let's look at the 7 stocks to see where they're at. All right, so here's Google. Steady uptrend, higher highs, higher lows, and then after earnings, it gapped down, sold off like 10%. Just a gigantic move for a huge company, and then it fell further on Thursday, and then fell a little bit further on Friday, although it closed off its off its low. But anyways, you had a nice uptrend that's completely disrupted now. The trend is no longer up. It will take time for this to repair itself. Next up, Amazon. So Amazon, broke down over here, consolidated for a month, broke down over here. It got a boost on earnings right here, but when you look at like high, 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 low, 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 we still have lower highs, lower lows. The stock's still channeling down. So even though it did well last Friday, we got almost a 7% pop. Unless Amazon can get above its 50-day moving average here, maybe come down and test it and then go, I'm going to consider this to be in a downtrend because we got lower highs and lower lows. So to me, it looks like Amazon is topped and is trending down despite Friday's move. Here's Microsoft. It gapped up on last Wednesday after earnings, gave it all back between the rest of the day on Wednesday, and on Thursday it fell hard. Friday it tried to move up, but got batted back. So I consider this stock just to be neutral. Okay, it's unchanged going back to last summer, and I would not consider the trend to be up or down. Next up, Meta, Facebook, was doing really well. So you can see it trending up over here, getting support from its 21, broke down, moved sideways, broke out over here, looking good, trading in a pattern that slants against the overall trend, which is bullish. And then, as you can see, it broke down here. First, it fell out of the pattern here. Then it broke a trend line here. Bounced back Friday. Nice bounce back on Friday. But I would consider this to be kind of like worse off than Microsoft, but I'll call it neutral. Okay, it might be in the process of breaking down over here, but I'm willing to call it neutral for now. Okay, but it's certainly in question. Here's Apple, lower highs, lower lows, going back to the July high. Nothing fancy here. Don't have to draw any crazy trend lines. It's pretty obvious what's going on here. The stock's still up nicely on the year, but since the July high, it has definitely been trending down. NVIDIA has been flat. Everyone sees this. It's got support here at like 400. We got this big unfilled gap over here. I'm not going to predict whether it fills or not. It'll depend on the overall market, but this is neutral. The stock has put in a high at the end of August, towards the end of August, and has put in lower high, starting to channel down here, lower high, lower low. So we'll see what happens. But so I would consider this one to be neutral too. And finally, Tesla, not obvious here, but this was actually a nice consolidation pattern within an uptrend. And then it broke out in May and June, ran up, consolidated. This up and down movement is fairly normal. Tesla is a pretty volatile stock, so that's a lot for some traders, but that's actually fairly normal for Tesla. But then 2 weeks ago, it broke a support level, gap down, and you can see what's happened since. So now I consider this to be in a downtrend. All right, so between these, so on one hand, if the market's going to do whatever these 7 stocks are going to do, there's definitely reason to be worried. Microsoft, Facebook, NVIDIA, they're probably moving sideways. I'll give them the benefit of the doubt and say they're moving sideways, especially NVIDIA and Microsoft. Google, Amazon, Apple, Tesla, to me, they're clearly in downtrends. They've broken uptrends. They've broken trend lines. They're put in lower highs, lower lows. Key moving averages are trending lower. In some cases, key moving averages are acting as resistance every time the stocks bounce. So whereas for the first 7-8 months of the year, these 7 stocks very clearly trended up, higher highs, higher lows, moving averages moving up. But now, 4 of these stocks are clearly in downtrend. So if the bulk of the gains this year can be attributed to these 7 stocks, and 4 of these 7 stocks are now in downtrends, to me, 2 things. Again, one, the implication is that if these stocks are dropping, that implies something about the market and the economy. And then 2, just the math involved. The market just can't rally very much unless these stocks participate, because again, one Apple moving down, you would need a couple hundred smaller companies to move up in order to counter that. Okay, so these are the leadership stocks. They don't have to lead the next bull market, but until the indexes figure out, redo the math and how they're calculated, the market cannot move up. At least the large cap indexes cannot move up without these stocks participating. And right now, there are cracks in the dam, and in some cases, water's flowing out pretty quickly. All right, hope you got something out of this. See you next time.